Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, the 21st of October, 2020, getting on to 6:25 in the evening. I wish I could say it was afternoon. It's not. It's dark in Chicago. It's amazing how it all changes and how fast it all changes. Now, let's review a few things before I go anywhere. First, I want to thank everybody. We crossed this week over 10,000 subscribers on our YouTube service. To me, that's a big event. We've done no advertising on YouTube. I want to and will start it, but we have never done advertising. I'm amazed at how many word of mouth. But you make it for us. Please tell your friends about us. This is free. See if it makes sense to them. I think that they'll find that it does. And if you're a paid subscriber of my information, you know how hard I work for you. I'm going to be tomorrow, remember, on Sky Biz at 4:30 p.m. Eastern Time in Australia. And I do interviews, as you know, all over the place. And admittedly, COVID has changed things. It used to be I probably was on TV 3 days a week, 3 days a week. It's less now. Yes, you could do it from here, but it's not the same energy or anything like that. And I do understand it. Now let's talk about the elephant in the room. There's still no deal between Ms. Pelosi, Mr. Mnuchin, and the market is reeling on it. It went up, it built in that there'd be a deal, now there is no deal. So the currencies are giving back a little bit on that, and probably on the dollar, you've broken enough to get a bit of a bounce here. Don't be surprised. As for the metal markets, they still believe good is coming, but in the metal markets, when you look at my metal video, you will see that we've already hit the upper Bollinger Band on the silver, copper, and gold. That's enough to cause some problems for the market. They might want to hang in there for a bit. They're ahead of themselves a little bit in pricing, possibly. Energy markets are still reeling to the downside as COVID just keeps exploding around Europe. And of course, in the U.S., our cases are out of control. We will probably break records now in many states for COVID. The CDC today changed how many minutes of exposure to it you can get before getting it in cumulative time, rather than you have to be next to somebody, say, in an airplane, not coming out against the airlines, but 15 minutes that person had it, you might catch it without your mask, washing your hands. Now you walk by somebody with it with your mask off, you get 15 minutes total of doing that in a day, you might, the word is might, be able to catch the COVID. Scary. When we take a look at the S&P 500 on a weekly area chart of closes, we still have not been able to get back over this 3504.5. I personally think it's just a question of when, not if. I still look for the Santa Claus rally this year, regardless of who wins the presidency. It'd be nice we keep things going in the economy, and why not? Whoever wins, we're going to get a COVID bill, whether it's in front of this election or after it. If we get a lot of Democrat sweeps, as many people think it might be, well, that means you get even more spending. So that's friendly initially. Down the road, there's the piper to pay. A lot of people are talking, well, how does that happen? Well, maybe there's enough growth you do it. I don't know. What I know is you raise taxes enough, you take away incentive. I am not a fan anywhere of raising taxes. I am definitely a fan of you pulling your belt, like we all do that own our homes and so on, and have families, and you make things work. You don't make them work by just saying, hey, give me more money, I can tax you at any time. Solidly against that. When I look at the S&P 500, we still have this inverted head and shoulder formation, which means it still is confirming my thoughts of bullishness. I still think the market can end up the year 3,600 plus. Change this pattern and I'll change my tune. You haven't changed it yet. When I look at the swing line study, we are certainly and have been in a downside correction with lower highs, lower lows. This didn't begin today. This has been underway. What has been the objective? The 18-day average of closes. When you lose that number, that's where you typically go. Now today, just to give you an idea, you hadn't hit this number yet through today. Still missing it. You typically get there. Does it have to? As I told you, I think the ultra smart people said, I don't need that last point. What's the difference? You typically get there, but it could be a combination of the average moving higher and price staying stable. And tonight, bada, That's exactly what's going on. You are down 5 points, but with a low of 34.23.5 and the 18-day average at 34.23.70, bingo, you've hit the number. Okay. That's all that it had to do on the correction. I've met the target. That doesn't mean it can't convert into a bear market. In fact, any close under the 18-day average is bearish tomorrow. What about looking at Bollinger Bands? Well, you would hit them 2 times, 3 times, and then you backed off. I will teach you over and over as you watch this to stay with the discipline of understanding that you only 5% of the time will you stay outside of those bands. That doesn't mean you can't lock on it. I have a term when you lock on it, the gorilla glue trade. And what that does is it then forces the momentum to embed when that occurs. Most times, the momentum is going to lead the price. But there are times when the price just locks itself in and you're going to flip the gears on that slow stochastic and make it embed. When you lose the embedding, it is a warning sign that price is ready to come back to the 18-day average or the closest moving average under it. Most of the time, it's going to be the 18. Here's the next day. I know you don't believe it. You're bullish as can be. I'm thinking it's going to the 18-day average. Took a while. I'm there. Now I'm satisfied. All right. What about the Dow? Same thing. Happy as can be. What about the Russell? The Russell lost its embedded reading, hasn't hit it. So what did I tell my subscribers? They got to be out of the market. That's simple. My paid subscribers that we had been long in these markets, time to be out. That's simple. Why? Why would I buck what I teach? If I do that, I'm useless to me and I'm useless to you. I think it's going to get over there. It's a correction. If you get under this number, you then have lower highs, higher lows, or possibly lower highs and a lower low. I don't know how it's going to end up yet, so we have to wait and see. In the VIX hit the upper Bollinger Band 3 days and gets thrown back. Remember what the Bollinger Bands are. They're brick walls. And yes, your kid can break them down with your sit-on lawnmower, and you got to call the repairman to fix it and come back. And when it goes up again, it's another resistance point. Think of it that way. So when you hit these numbers and fall back to key averages, it's a reset on them. But when you hit it the first time, you've got to do something and backing away. You always look at momentum and what it's doing. Any move under 28, 29 would do that. But you're at a resistance point in an overbought market. So, do you have the makings of going higher? It's a hard one. While the trend is up, take out 28, 29, no. In the T-bond market, what did you do for the first time today? This is today's action. You hit that lower Bollinger Band. What are you supposed to do? If you follow me or if you haven't been there, what I teach you here is the first time you hit a Bollinger Band, I don't care if it went lower here, you'll have another opportunity. The odds on play is that the first time you hit these, the market turns away from them. It doesn't always turn away that big. That's not what I'm looking for. I'm looking for the smart, quote unquote, smart money, the pros, the algorithm boys that understand trading, to be having orders in to take off some positions against that, to give them loading power if the trend is down to sell the rallies. And you're still in that position, as I call it. That doesn't mean they came out of everything they own. You probably trade one contract. I teach in my charting course to trade a minimum of 2. You know why? You can't be right on one. You can catch the bigger trades if you get on the market's money, take something off, put a stop in so you're on the market's money and see if it can run. It changes your mental perspective of trading. But if you roll everything with that one trade, one price, I think you got a problem unless you have multiple contracts on. When you 10-year note, what number did it hit today? Here's the market coming in. What would I tell you to do? Yeah, I wasn't short or telling my clients to be short, but I certainly had never had them long on this. I can defend that. I put out my written updates. I know what's in them. They're published. Nah, I would have told them overbought, number 1. Number 2, never closed over the 18-day average. Don't trust the market. And what is my rule? I do have a rule. Let's share that with you, because if you take the charting course, you get the benefits of a lot of this. When you are under the 18-day average, the only thing you're looking to do is sell. When you're over, the only thing you're looking to do is buy. That is a filter. It also filters what the swing line is doing. What's the other filter? You're never selling short at a lower Bollinger Band or buying one. You're coming out against that with the idea that maybe there's a better place to come in, and at the very least, you cashed in on something if you were long or if you were short. In the eurocurrency, we're up at that upper Bollinger Band in an overbought market out of sideways, pretty much sideways action. It's not quite a pipe. A true pipe is this. When you have this exact sideways action, and then you get actions that come out of that. This isn't it. This is still a market that's trying to reestablish an uptrend as I view it, but it hasn't done it on my work. I have no idea what happened in the Japanese yen. When I looked at the quotes this morning, I went, what the heck happened? I'm looking at it and I go, what's this all about? And it just came to life to the upside. Notice the market never closed under the 18-day average here. When it closed here under it, it was under the influence of already higher highs and a lower low. There was no trend. When it finally got back to that number, it had a lower high and higher lows. You never had a setup. I don't know what that was all about. Still don't, by the way. When I look at Bitcoin, I'm bullish. Now, obviously, this got a big play today when PayPal said it's going to start accepting digital currencies. Now, I didn't read the whole article to understand everything they're doing, but this is not some obscure person, or I don't want to call it a person, a vehicle, a pay vehicle that's going into it. You know, when Facebook said, oh, I'm going to do a Libra thing, that's not the same as PayPal saying they're going to do it. If you think it is, get serious. How many things you buy with your Libra? Was that what it was called or whatever they were doing? PayPal? I use it all the time. I'm sure you do. You know, most people have credit cards, PayPal. They use different easy services, and it's one of them. Trend up, bias up, over the upper Bollinger Band with what? An embedded reading. So when you have an embedded reading, you're always looking for bullish surprises, not bearish ones, and you got that. Wish I could tell you that this is a spot to come in now. It isn't. It was back here. And the markets just kept running. It also developed a gorilla glue trade. Do you see that right through here? Hitting it, hitting it, hitting it, hitting the upper Bollinger Band, hitting it one day away, and then right back on it, and explodes now. That's the gorilla glue. What about the Brent versus WTI crude? Well, the differential got yesterday or so to 150. Today it's 170 or so. As you can see, this chart is, on the Brent at least, is bearish. You have lower highs, lower lows. This was the first settlement under the 18-day average with momentum turning down. So I am expecting that the pros are looking to be short in this 42.16 level, take out 43.22, and I think they're wrong. If they can drive the market, maybe the $40 level is where the market goes to. I'm not quite certain what the pattern is in WTI. Why? If we come all the way back right here, you have an outside day up. So at that point, I had higher lows, higher highs. If you take out this low, it's a bull trap. Why? If you take out the low of an outside day up, within 2 sessions of it occurring, I call it a trap, and the market often goes to the closest moving average or the Bollinger Band, the closest of. Well, right here, the market the closest of was unfortunately, right below it. And I mean right below it at 40.72 in the 18-day average. But it is a bear trap. Does it have the wherewithal to get down to the Bollinger Band? I don't know. In the heating oil, no, there is no chart pattern that makes sense. You've got a higher high, a lower low, momentum down. I wish I could say I have a trend. I don't. I need lower highs, lower lows under the 18-day average to be trending down or keeping the uptrend. You don't have that at all. In the nat gas, I think you got close enough today to call it a day. That's your first challenge that you got within 90 cents of the Bollinger top. You can wait for it to be hit. You're overbought. You take the money off the table, and that's what I would be doing if I were long and looking at it. That does not mean I'm bearish. But you're only going to stay over this number 5% of the time. Why do you have to hit it exactly? 90 cents isn't bad given the move it's had. I teach you this and a heck of a lot more in my morning futures video. You know why? I teach in the morning futures video with all the tools that my people that have bought my charting course get. Now, if you're a subscriber, you also get a discount on my charting course, a sizable one, $100 discount. So the course is $199.95. It's $99.95 for my paid subscribers. Also, I cover on the weekend weekly charts. So you're going to get, now here's how it's going to work. I'm going to try every Friday night, barring me going out, and with COVID like this, I'm not going anywhere, to put out your weekly wrap-ups. But then for my subscribers, they get the buy-sell of the weekly charts, both in the Spider ETF and in the Futures ETF, where I'm covering everything. Your subscription covers your QT Mobile. So if you have a smartphone, I don't care if it's iOS, Android system, doesn't matter. This will work. We have a push notification. So instead of a text that you pay for, I give you a push notification, pops up, you just hit it. The video that I put out in the morning is going to play, or the video I put out in the evening is going to play. My written updates for those of you that are paid subscribers will come and play right in this for you. For those of you that aren't paid subscribers, that's all blocked within it. You can try all our products, but you won't get that. This works on tablets, and it works, of course, on computers. So you get all that, and this is not expensive, folks. We are talking, to give it a try, $7.95 for 30 days. After that, it's $15 for 30 days. I cover in the morning at 5:40, I start recording. I cover all these markets in this exact sequence, spending a lot of time on each one. The typical video is over 20 minutes long, but let's assume that you just want to get to your metals. Just drag the slide bar, it'll light up in big letters. Remember, again, I'm older. And it's going to say metals. Just let go, it plays the metals. I can't save you more time than doing that. So that's the way that we work with that. I think you'll see it, and that works on our website. That's the big video there that takes your whole screen up, and I think you'll really like what it does. So again, to get this, simple as can be. It's $7.95 for 30 days. You just go to our website under the word research. It's on the very top. It's there. You can call my staff. They'll be happy to work with you, get you all set up, and away you go like that. I'm Ira. Have a great day. I will see you all tomorrow.